right, guys. So, hope everyone's doing well. Thanks for tuning in. So, I'm actually currently short pound and US dollar. I've been short since yesterday. I have two positions now, currently three because I just took another scale in. Very controlled size. For the most part, this month has been difficult. Okay, very difficult market to trade in, but we constantly show up and. This trade here, I mean, it's already looking really well. We have already kind of recovered most of the losses here. Um, but at the worst, if this has to go and if it's, for some reason another headline comes in and things switches again. But I think for the most part, I think markets are getting tired of it. But then yeah, I mean, at the most, it's just sort of a risk-free trade at this point. But we're aiming for these lows. Obviously, trail stops. So I mean, essentially, we could also be out of the trade a lot earlier. But if we do hit TP, um, then well, we'll be actually up in profit for the month, erasing pretty much the losses so far. So yeah, I mean, just a little update. I know I want to be transparent about how it's been this month. Last month has been great, very stable month for us, but this month has been a little bit difficult, not gonna lie. So overall, the losses are not insane. The way we trade is we always trade with controlled size. Risk management is very important. How we spread our risk, especially if you're trading different currencies at once, it's very important to spread that risk, right? So in this case, for the most part, we're only trading this particular pair at this point, but very heavy on the pound short here. And I want to go a little bit deeper into why. But before we do have to keep an eye on the core PCE readings today and also the preliminary GDP, but I do believe we most likely will stay at 2%. But for the core PCE side, some are saying that there could be a possibly upbeat here of maybe 0.4%. Some economists are saying so. We'll see how this goes. I do feel that there's a good chance that we could beat expectations. Considering right now, yields are rising, oil is still elevated. As you all know, the recent headline we've been getting is not really that great. The US has already been sort of striking at Iran with their missiles, and we're just kind of getting this hot and cold, hot and cold, hot and cold type headline. But for now, it definitely seems more bearish. Um, uh, Well, no, yeah, I mean, it sounds bad now for the geopolitical side, but it's obviously bullish for the US dollar, for US oil, for crude oil, and for global markets in general, right? This is going to increase inflation across the board if things do not get resolved. And even if they do get resolved somehow, the inflation is still going to be there from, the inflation that's caused by the energy shock is going to be carried forward, right? So this inflationary issue isn't really going to end for the year, probably. I mean, I've been watching Bloomberg as well. I think it was a senior portfolio manager, if I'm not wrong. Can't really remember his name, but he's also, kind of expecting that, the yield market might actually be, in a lot of trouble for years, actually. So that's where we're at, okay? And just to go now deeper into why I'm actually trying to short the pound and US dollar. So we're getting a bearish reading, a good score here, I would say a -8 on the edge finder. So let it just load here so I can just show you what's causing the bearish sign. So the first thing is I wouldn't look at the technicals. That one is, I mean, we can see that on our own, not necessarily to utilize this, but yeah, I guess it helps to have that, I guess. But the most important part is this one is actually supposed to have a score here. I'm not too sure why there's no score, but we've been getting a lot of institutional bearishness on the pound, which I'll show you guys later. Inflation as well has been bearish, job market is weak, economic growth wise has been a little bit bullish, right? So let me just go to the latest COT report here. So what we can see is that the pound has been getting a strong bearish beat here, right? A strong decline in long contracts and an increase by in short contracts, right? Now the US dollar isn't really getting, isn't really sort of better, I would say, but you can definitely see the pound is getting a stronger bearish reading. And if we go to the COT data history, the pound has been declining for quite a good while now, right? What we can see is that since 2024, the long percentage has actually been weaker. Now, there has been a little bit of a rebound, but for the most part, it doesn't look very positive. Um, and you can kind of see that we've been actually getting a little bit more increase in shorts here in net positioning. So overall, institutions are looking to actually continue short, I would say, and there are tons of reasons for that as well, right? So if you go to the UK economic heat map, just to kind of go deeper into what's been causing the pound to be weak, among other things as well, which we'll discuss in a bit. Services PMI came in bearish, retail sales came in bearish, CPI came in softer, right? So that's actually more weaker for the pound. But PPI came in bullish, so that's something interesting to take note as well. So that will still continuously keep the hawkish stance on the Bank of England. The unemployment rate also came in hotter than expected, which is bearish for the pound, right? So very, very bearish indicators for the pound. Now, the US front, like I said, for the most part, the US has the inflationary issue, right? I mean, among all the other currencies, but if we look at the economic data front, we're actually getting a neutral reading, right? So it's not great either, but it's not necessarily bearish, right? Jobs wise has been relatively, upbeat, I would say. If we go to the asset scoreboard, we can take actually a better look here um, on the US dollar. We're actually getting a bullish reading for the US dollar of a +5, and the reason being, for the most part, is we have strong inflation, we have strong jobs market, right? So it's not, I wouldn't say it's great or amazing, but we're not necessarily dire. We're kind of um, still relatively good, I would say, stable. But if you look at the pound, we're getting a really strong -7 here, right? We have overall bearish economic growth, bearish jobs market, neutral inflation, bearish institutional positioning. It's a no-brainer, guys. This is a this is a shot. Okay, so I hope that makes sense. Um, Now, what I actually want to go over here is, give me a second. The other thing that is also important to take note, right? We're actually getting some political instability as well in the UK, which is actually one of the, I would say, stronger added points towards why pound is a really great shot. Um, the UK has always been having political problems. It's been like that for the past few years now. But recently, as of recent, we are having the same issues again. So obviously, Keir Starmer, which is the current prime minister, he's not really getting a very good positive outlook by the people, right? He actually didn't do didn't do very well in his recent election, and that's going to cause some or lawmakers to actually possibly want to look for maybe a new leader, right? And for the most part, the UK is, having a lot of issues with, among other things, right? I mean, they still have high borrowing cost, weaker growth, and this is really just going to increase more costs for the UK, right? Because if any investor would want to invest in this country, they're not going to invest unless they give a higher risk premium. For example, if they want to invest in the bond market, there needs to be a higher risk premium, and that's the reason why we've been seeing elevated yields as well on the UK. Right? People are not going to want to invest unless they get a higher risk premium, right? Or a higher return, basically, that's what it means. So that's really going to increase the cost for the UK government, right? Among other things. And just to give you some insight, Reuters actually cited that an estimated 1 percentage point rise in yields could cost the government around 15 billion pounds more per year. Okay, so this is really going to affect everything else, right? And people are not very confident. They're worried about the fiscal rules and they're worried about things tilting. And there's just been so a lot of back and forth there um, within the Labour political party, right? So, obviously households as well will get affected if mortgage rates keeps rising. That's going to cause a lot more problems for people to want to buy houses, right? Businesses would be largely affected. And I think growth is actually going to get a pretty strong hit here. And with that, even if, let's say, for example, right, I don't think will happen anytime soon, but if, let's say, inflation does go softer because of these weaker growth and the central bank decides to cut rates, this isn't actually going to be a very positive thing because they're cutting rates when growth is actually weaker, right? So this is actually the opposite of something positive, right? They have to cut rates because it's a danger zone, right? I mean, that's just a hypothetical, but I hope you can understand that cutting rates is only good when growth is good in a sense, but the inflationary velocity isn't, steepening, if that makes sense. I mean, inflation is always going to be there. I don't think, people, we all have to understand that inflation is always going to be there regardless, but it's about the speed of how it's rising is what matters here. And for the most part, markets are actually pricing in holds for the rest of the well, not just the rest of the year, but even till Q1 of 2027. But if we take a look at the um, interest rate projections here for the pound, for the most part, they're actually expecting to increase rates. But if we do get weaker growth and inflation does come in softer, then there's really no reason for this to be the case, right? So the next few meetings will be very, very important. But for now, I hope this makes sense. I mean, definitely, I would say that the Bank of England, the central bank of England, they're not really going to focus very much on hiking anytime soon. I think they're probably going to hold rates for the next meeting. At least that's what market participants are pricing in as well. So there's really nothing really bullish here for the pound. So yeah, guys. So I'm still very, very confident in this trade. Like I said, the only thing that I need to be aware of is the upcoming PCE inflationary data. But as of that, I'll size him appropriately. I mean, my stop loss will be scaled or trailed, sorry, not scaled. So once we see a little bit more sell-offs here, I'm gonna start to move my stop. Yeah, so regardless, we're still gonna be profitable in the trade. Um, and yeah, we'll see, we'll see what goes on. Very, very small size I took on this is really pretty much marginal as compared to how much I'm up so far on this trade. Yeah, so we do hope that we get to see a little bit more downside here, ideally, but so far it's been really great. We also had a really good trade as well on CAD Swiss franc. Um, so this particular trade that we took as well has made back a lot of our drawdowns. So along with our current GBPUSD, if we can actually get a good win here, then we're going to be up massively this month. And yeah, that's just trading for that's trading, guys. I mean, there are going to be weeks where it's going to be down. You're going to have months that you're going to be down as well, right? No one's win rate is going to be perfect. Something that I like to go to is the kinfo.com app. I don't know if you guys know about this app. It's basically a verified place where you can see all of the traders sort of returns so far. I think it's like a leaderboard almost. So it's all verified because you would have to connect to your broker in order to actually get those information. But what we can see here is okay, has a high win rate, great. Okay, but if we look, how about this person, 9.7 million, right? 4.23% win rate. Okay, hear that for a second, right? 4.823% win rate. We have some that is a lot lower as well. So how about this? 38.77% win rate. He's up 1.8 million. Okay. I mean, so win rate isn't really necessarily the most important thing when it comes to trading. But what's important is when you are in a winning trade, are you maximizing your returns, right? Do you have the right framework to maximize those returns? And that's something that I'm going to go over more towards as we go along in our channel here. And as you join us in our journey, I'll probably share a little bit more info, share maybe a PDF, maybe even a video, some sort of course that's absolutely free. There's no chargeable, it's not chargeable here. And just to showcase, how we actually enter these trades, what we look for, how do we position ourselves, how do we manage our risk, how do we spread our risk, how do we enter, how do we execute, etc., right? And this goes on. And I think it's really going to be very valuable because the way we trade really does allow us to actually maximize the returns. And if we are in any sort of losses, they're very, very controlled and minimized because we don't, well, I'll talk a little bit more about as to how we do it here, but that will be in a future video. I also want to mention that we have a free community coming soon on Discord. So that's still in the beta stage. We're still trying to build more things into the channel. But yeah, join us, and build this journey together. We're looking to grow this channel. And so yeah, please give us your support, guys. Subscribe, like this video, comment as well. I'll be happy to always answer comments. We're quite fast to do that as well. And share our video as well, guys. Let people watch our videos. And but I do want to mention as well that this is not financial advice. This is strictly our opinions for educational purposes as well only. So just to make that kind of clear, right? But in any case, yeah. All right, guys. Cheers. Have a good trading week.